Welcome to Breaking Banks Africa. I'm Matteo Rizzi, and together with my co-host Nadine Doro, let us take you on a journey of entrepreneurship, innovation, and vibrant ecosystems Africa has to showcase. More than 1 in 4 people will be African by 2050, this continent being already the youngest of the planet. You can't miss these stories. This is Breaking Banks Africa. Let's roll.
Hey guys, welcome back to Breaking Banks Africa. This is Matteo Rizzi. I am the executive producer of the show, and today is episode number 13. And I'm here with my longtime friend, Martin Labbé. Martin, and it's going to be, of course, Martin for the English speaking people. Very welcome to the show. Hey.
Thank you, Matteo. Thank you. Yes, Martin, there are many variations.
They all work. Listen, let's start by, sharing a little bit of your background. You work for an amazing organization, and I have actually collaborated a lot with you guys. Some memorable mission in helping entrepreneurs across the continent to understand better what entrepreneurship means, but also raising funds, a lot of workshops, but you're going to explain it much better than myself. Please.
Now, I'm not sure I will do it better than you, but clearly we had a few opportunities, and I'm not sure we've ever been together at the same time in the same place, right?
That's incredible. I think I know every one of your team or your previous team, yes, but never with you in person.
Exactly. Yeah. So, one of those moments was in Ethiopia, which I think is a really exciting place. And I hope that, this trend that we have seen in recent years with the ecosystem improving, being more business friendly is going to continue because it's going to be such a huge opportunity. The same for DRC. I was just in Kinshasa last week, and it's one of those ecosystems, 100 million people, big internal market, where you think it just needs so little to really start booming. So, yeah, but before I talk about that, you're asking where I come from. So I'm French. And so as my name maybe says to some of you, Martin Labbé, and I've started my career for a very short period in the private sector. I was working in the marketing department for Habitat. It's a extinct retail chain, but we were doing really exciting stuff. So I was on the German market doing marketing, and I think this marketing aspect is what I've kept throughout my career. So really, I don't know if I can call myself a marketeer, but that is really the thing I've been doing ever since. And so after Düsseldorf, I went to Kazakhstan. And I've worked there for the French Trade Promotion Organization, helping French companies get business in the country, basically. So Central Asia, frontier market, very exciting times in the late 90s. And after that, I was sent to London, and that's when I started working with the tech sector. So I was in charge of tech sector development with Business France in London. And I've never left the tech sector since then also. So marketing and tech, these are the two really pillars of my career. And so back in 2005, is already a long time ago, I came to Geneva for personal reasons. My wife moved here, and I fell into ITC. And it was really, I was looking around for a job. And I had a first contract, and then one after the other, and here I am. And I would say this work I've been doing was very similar to the one I did previously, working with IT and BPO companies from Bangladesh, Kenya, Uganda, and so on. To the one I've been doing in London, so helping companies go to market really. In 2015, in Bangladesh, it was my first encounter with the tech ecosystem. So, we were working with the outsourcing industry there, and somehow I got to joining a SeedStars event. Yeah, SeedStars was doing their big mapping exercise.
My friend Alizé de Tonac back then in time, right?
Yeah, so it was amazing. They had all these country competitions, and we were a sponsor for one of their competitions in Dakar, and it was the Woman Award, basically Woman in Tech Award. So I really didn't know so much what was going on in that space, and that's when I started discovering it. And we were partnering with SeedStars on their country events until COVID. That's when they stopped. So for 4 years, we had really a lot of great events together, and it helped us also understand better that ecosystem and people like you know, on the investor side, how you look at the world, how you look at the companies, and so on. And so we started also adding a startup stream to our projects, and that's when it all got started really with the tech ecosystem.
How does the ITC works? I mean, who are the funders? How do you decide, which countries are priorities? Because I worked for sure, at least in Ethiopia, in Ivory Coast, and I believe in Uganda, if I'm not mistaken, Uganda or Kenya. But there are a lot more countries that you cover. How do you make that balanced decision? And then follow-up question. The objective or the end goal is make this ecosystem self-sustainable in a way that not only capital, not only with capital, but also with capacity building, training the entrepreneurs, make sure that they have a good path to find the clients, that probably even the way they upskill themselves, the works. So how do you see this? And every ecosystem, of course, has its own challenges. So on one side, how does it work? And then what does it mean to you, a self-sustainable ecosystem?
Yeah. Okay. So on that front, I mean, it's such a vast question. But let me first start with the first one, right? So for us, what is important is that we have a matrix, basically. So we have the countries we work with, emerging markets, and we are telling them the areas we work in. So, they have certain organizations have a specialization, bilateral, multilateral. So ITC, for instance, doesn't do the same things that the World Bank is doing. We are not into financing. UNFPA, for instance, is another UN agency. They do things we don't do. So we try to really be complementary with the other organizations. And in our case, so with the relationship with the countries, what are their priorities? What are the strategies they have for the development? And then it's the countries on the other side that are funding our activities. Usually a lot of it comes from the EU. It's our first funder. And so the EU has a number of engagement strategies with countries. And so we are looking at fitting the two sides here. The same for bilateral donors like the Netherlands, for instance, that you have been discovering with the Netherlands Trust Fund. They have been funding a lot of our activities. We're also working with new donors like Korea, for instance. KOICA is funding our project in Sierra Leone, where we also work in the tech sector. And we have also totally new kind of donors like the MasterCard Foundation, which we have started engaging with a few years ago only. So we have a broad spectrum, but it's more traditional development aid, and we make sure that the work we do fits into what the countries want, and that is becoming increasingly important because there is a shift in the priorities for the countries. So it's less about aid; it's more about making connections on trade and investment. Investment has become extremely important. Again, back to you. So this connection with investors in the tech sector is extremely important because that's what is boosting the development of the ecosystems. And so we are, from the beginning, when we work in the ecosystems, we want to establish those connections. So it's working not only with SeedStars, the event organizers, but now with SeedStars Africa Ventures, and understanding the investment thesis. So what is it that you want to invest in? And we come and we try to bring connections with companies that match their thesis. When we do that, increasingly, we also want to do it through institutions, entrepreneurship support organizations, tech hubs, incubators, accelerators. So just last week in Kinshasa, for instance, with the UK, we have trained a number of incubators and accelerators on understanding how the investors work. Actually, AfriLabs released a study recently. They said only 20% of tech hubs understand what an investment thesis is and have connections to investors. Although they're extremely important to go through and access the ecosystems. So we want to fill that gap and make sure that it's reverse. It's 80% of them having their own their own networks of investors and understanding how investors work. So this is why we also are partnering on events like Africa Arena or Africa Tech Summit, so that everyone gets together, So sustainable ecosystems is when we are no longer needed, of course, and when we move from less than 1% of global venture capital going to Africa to a lot more than that. So there's a lot of room for growth. And for that, there is also a need for local de-risking. It's very important. You are the financier here, and you know that it's about combining forces when we go into investment. And so this local de-risking can happen with government, but also with local investors going into business angel investments or into African VCs.
I have an amazing story to share that actually happened during one of the ITC mission I did in Ethiopia, that actually shows another angle or of what does it mean to make an ecosystem self-sustainable. And I want to share this story. I'm sure it's going to resonate, and you have many more examples like this. In that cohort, there were 3 startups that were actually all dealing with coffee plants innovation. One was detecting the soil fertility. Another was using AI to detect the sickness of the plants, and by detecting it immediately, the how do you say it, the agricultures, they were able to prevent the sickness. And the third one, it was about irrigation. So one was analyzing the quality of the soil, one was analyzing the sickness of the plants, and the third one was like how much water was it needed, and they were using satellite images and stuff like that. So the story is that all 3 of them, all 3 entrepreneurs, they were actually trying to sell it through the coffee unions of Ethiopia, which is basically the only organization that is able to take this decision. And when I was there sort of coaching these entrepreneurs, I said, guys, but wait a second, why don't you build up a consortium, a coffee innovation consortium where you all guys get in, you're selling 3 different products, but to the same counterpart, so that you can, create event, mutualize marketing costs. And it was incredible because it looked like nobody thought about it before that conversation. And for me, as someone who's maybe a bit more experienced and also see things, from, outside, it was the most natural thing to do. So what is, I believe, very symptomatic is that sometimes we think that investment is the only thing they lack, but actually is also someone who is able to help them create this connection that they often don't think about because they are so focused on the product, and very often, let's say it about survival, right, that they don't think about it. So I wanted to share this story and also see if it resonates with you, because funding is one of the aspects, but it's certainly not the only one, right?
No, you're right. So we are obsessed about funding because the startups are obsessed about funding. And so what we always tell them is your first funder is going to be your client, So if you want to be sustainable, get money from your clients, make sure you have products and services that sell. And for that, we see that some of them actually maybe need to refocus a little bit on that value proposition, and so we help them with that. But to go back to your point, this notion of clustering different services, creating a consortium, is extremely complicated. Very often these companies lack the trust to actually work together. Yeah? And we see that the ones who do it, we have seen it in a number of ecosystems that, like in Sierra Leone, for instance, you have companies, it's an emerging ecosystem, but we have seen people, companies and hubs also, tech hubs, working together, submitting bids together because they know each other and they trust each other. They will not do it without that trust factor. In the early stage ecosystems, it's a big parameter, and also about being able to offer more than one thing. It's interesting because in Ethiopia we have seen Oromia, the coffee union of this is probably the largest one in the country. Instead of working with one of the startups, they went and worked with one of the established IT companies, because the IT company was able to talk corporate, and the coffee union is corporate, and they were able to offer a number of services. So they didn't push their solution. They were listening to what the Oromia Coffee Union wanted for them, So that was really an interesting case study. I think we have an article about this on our website. So if people want to check it out in further detail, it's called EMC2 and an Oromia Coffee Union. So I would say this year is something where the structuring of the ecosystem it makes a big difference. Well, if you are in Sri Lanka or in the Philippines, the situation is totally different from least developed countries. So obviously this focus on investors, when you have such a small pool of investors to work with in Africa, it's a problem, because you have only so many that are interested in the ecosystems outside of the big four, because it's less than 1% going into Africa of the global VC, and then 80% of that goes to the big four.
Yeah, absolutely.
So it makes it very complicated if you are Chad or Burundi to raise capital.
Absolutely. Actually, you and I had a very interesting conversation when we were chatting about the Inclusive FinTech Forum that is taking place soon. Let me do a little ad in Kigali, 9th to 11th of March. We were talking about the fact that there are a lot of initiatives that are aiming to give visibility to the startup, in some cases, some money even. Always some kind of mentorship. And the challenge is that in certain cases, it almost becomes a national sport for some of the entrepreneurs to jump between one challenge to the other for two reasons. One is that, for some of them, even like a relatively small price, like a 3, 4, 5, 10K, is practically a year's salary, if not more. So it's not like giving $10,000 to a European startup where they barely survive, a few weeks, depending the countries where you are. And the second reason is that there are so many and so scattered that actually when the money finishes, then they jump to the next one, and they actually never really grow. They just sort of they go from one lifesaver to the next one, right? And I wanted to see, what's your perspective, also because that also brings the challenge of the type of investment in Africa doesn't need to be the same. Sometimes when you give $1 million to a startup outside of the big four, this is money that they can pay their salary for 5 years. So if you're not educated on how to spend it, then it becomes also a problem. So, and I know that you led the initiative within ITC that actually has, at its heart is a very, as at the core is really this intention of educating entrepreneurs, right, on this field. Let's develop a little bit more.
Yeah. So when we developed Fast Track Tech as a methodology back in 2019, it was exactly to address that gap that we saw on in most of the ecosystems where we were operating, that you had this missing internationalization aspect. So there's a lot of incubation, a lot of local acceleration. In certain ecosystems like Ghana, you had 70 programs at the same time doing entrepreneurship support. So Andy came up with a report about this, and we thought, oh wow, this is really a competitive space for a program to come into. And so where do we add value? So for us, it was going for this international expansion support, helping the startups go international. That's where we were adding value. And so the Fast Track Tech methodology is built around that. It's about helping entrepreneurs go international. And whether it's meeting with international investors, international partners, international events, international markets, it's all about that. And so for us, it has been a really successful approach. And it's also where we want.
What is it, Martin? Is it a program? Is it a playbook? Is that like a net access? What is it?
It's a methodology. So it's a toolkit that we can apply. We have, for instance, it starts with a diagnostic. We have a 360 diagnostic that we can apply to startups. And it helps us understand where their strengths are, but also their weaknesses. What is it that we need to work on? Then we can have a look at a cohort. So you have a diagnostic of an individual startup, but you can also aggregate the results across the cohort. Let's say the cohort of startups in Senegal, we see that there are certain problems, for instance, when it comes to structuring their accounting. How do they do big bookkeeping? It was a recurring challenge for most of the startups. So we focused our efforts there. Getting ready for investor meetings and things like this. So that was very important. Now, the same applies to entrepreneurship support organizations, tech hubs, accelerators, incubators. They tend to have the same kind of weaknesses, the same kind of dependencies. For instance, from what we call the beneficiary business model. So basically, they are running on aid. They're running on grants that they're receiving from bilaterals, multilaterals, local corporates also. And it means that whatever they do, it's always following the money from those grants and having to adapt their business model to it, So they cannot really be intentional or strategic. So we're trying to help them diversify away from this business model. And that is a very important aspect for sustainability also, because then if they're able to also offer consulting services or be themselves a founder studio, so like M Studio in Abidjan, then you have less dependency on this beneficiary business model. But that is something we are developing very actively.
So, Martin, you bring something which is super important. And the direct question would be, do you actually think that the traditional VC model, the like a seed, Series A, Series B, that is applicable in, many of the Western economies, and I don't want to generalize, but let's say that, seed is anything from, a couple of, 20, 30, 40,000 to, a couple of hundred, and then you got in a couple of millions, and then you try to do a two numbers, Series B, and then, if you're blessed, you go on. I don't think this model is applicable in Africa outside of the Big Four. And even I would challenge that sometimes in the Big Four, it has been stretched in a way that it didn't help the ecosystem. That's why when you mentioned the venture studio, it is almost a different type of investing where money is part of it, but there is also a lot of work like mentorship, helping with relations, helping with structuring the board, things that doesn't cost money, they cost time of more experienced people, but at least it gives the opportunity not to think as a VC, because if you think that you can go in, I don't know, in Burundi, as you mentioned, our friend Devine working for GFTN is from there. And you think that if you give $500,000 to a Burundi startup, that you can get 10 times that money in 5 years, which is how a VC would think, I think you're delusional in most of the cases. So how do you, well, first of all, do you agree? Do you agree that we need to find a different way of investing? Is also something that you sort of, that you reckon, in the different markets? And what are sort of different options, to move a little bit the conversation?
Yeah. So what is very important is, first of all, the timeline. So 5 years is a no-go. It's not working. You need to have much longer time, much more time for an exit. And we see that with the few that have been taking place on the continent, it's not after 5 years. It will take place after 7, 8, 9, 10 years at least.
Which makes sense because it's also a duration of the fund, whatever. I mean, it makes sense. So.
Yeah. So the exit time is much longer. And then this chasing the unicorns thing is obviously a little bit more complicated. That's why some people say we have to chase the gazelles instead of the unicorns. So it's not about the $1 billion valuation. It's more about growing fast and having companies that are able to scale across the continent. Nevertheless, the number of unicorns has grown. So if you go back 5 years ago,
by all means,
Johnny Jumia, and all of a sudden you have this whole number of flutter waves and the likes that have been able to make it on the continent, and which are an indication that the traditional business model, although they haven't exited yet, but also works somehow. So what is missing is maybe this the stock exchange dimension. So we have to see how that can be developed. And then it's other kinds of finance that have to be grown on the market. I think here we hope to see more debt, for instance, with our companies, and that's also something where the intermediary organizations have a role to play to help the companies raise from whatever sources are available. And so they need to know where the money is on that particular market. Yeah. So it's complicated, but I don't think that it's a yes or no answer. It's more we need to continue with people like Launch Africa, SeedStars, and so on, investing in a traditional way, and then also developing that venture studio approach, like Founders Factory, like M Studio, which I think also requires an investor in the back. You need to have that investment in the back. But certainly for this model, the jury is still out there because we haven't seen a lot of venture studios on the continent. And so we don't know whether the success rate will be much higher than traditional ways of seeing startups emerge. But clearly, it's a business model we would like to advocate for, to see more experiments in that space.
It would be indeed super interesting to see how this more studio approach to investing is taking place, especially because I believe that in certain ecosystems, I was actually talking with one like a central bank, I think was from Malawi, and is actually the central bank that is opening up a studio for entrepreneurs. Actually, not even fintech entrepreneurs. It was because there weren't enough, right? And it is actually interesting how the urgency of taking care of local entrepreneurs in some cases is even carried by the central bank, because of course there is a financial inclusion component. I believe actually that the venture studio approach is, if not the only one, but certainly the place I would start from if I had to advise a frontiers market in Africa. But you're right, we don't have enough data, and lucky as there are organizations and people like you who care about sharing the data with the community.
We're trying, yes, but we're not the only ones. You have people like Brighter, for instance. They are great at aggregating the data. There is a number of initiatives aggregating deal flows and so on, and they are really useful. So I look forward to the next Partech report, and because they are putting data on the map, which is required to bring more people and invest into it. Yeah.
Martin, our time is up. Thank you so much for sharing your wisdom, and I look forward actually to have more of this conversation, and certainly to work more together.
All right, so do I. Thanks a lot for having me.
Guys, that was Breaking Banks Africa, episode number 13, and this is a wrap.
Thanks for listening to Breaking Banks Africa, a Provoke Media podcast in cooperation with timepledge.org. Don't forget to share us out or shout out across social media. If there is something or someone you would like to hear on our cast, let us know. See you next month on Breaking Banks Africa.